I got into crypto just through a friend who got into it himself in 2015. He did online poker. My background's in computer science. For years, I did like big data, machine learning before ChatGPT, AI was super cool. 2017, when Bitcoin and Ethereum were just like skyrocketing upwards, I'm just sitting in a conference room being like, what am I doing here? Eventually found this novel Bitcoin mining optimization opportunity where you could mine Bitcoin Cash. My current co-founder, who I had met through his time at BitGo, he just called me one day and he was like, hey, have you heard about NFTs? Are you doing anything with NFTs? It's like 2020. We started kind of talking about what was missing from like an infrastructure standpoint. And then that was really kind of the impetus. Like that was the start. That was like end of 2020. It took us a while to kind of build out what has become Arcade, this NFT backed lending protocol. In the next few months, it'll be about 3 years since we started talking about it. Things just kind of take a while to really get your head wrapped around like what it is you want to build and how to do it right.
So I'm over at my friend's house here, and I'm over here recording with Robert Masiello, who is the co-founder of Arcade, man. Really good to catch up with you. We first talked about 6 months ago, as we were saying, when we met at NFT Miami, although it feels like it's been a year or two. And since then, Arcade has just exploded in traction. You guys are really crushing it. I'm really excited to really dive into everything Arcade and the progress that you've made personally along this whole journey. So Rob, thanks for your time.
Yeah, thanks for having me on.
And also great camera quality. For once, like my camera, because I'm set up somewhere else today, I'm not in the studio. So you're definitely outweighing me in those options. But yeah, I appreciate it, man. Arcade, for those that have been paying attention, they're seeing all these kind of crazy things about real world assets. Somebody recently tokenized their Supreme shirt collection and borrowed against it for $1 million. And, you know, it's very interesting where all that's going. But first, let's dive into kind of like how we got there, how Arcade became this platform for, you know, borrowing and lending over $100 million over the last year, I think, or so. Rob, tell us about your introduction to crypto and like, what is your background? Did you come from the world of TradFi to then just say, hey, let's tokenize this stuff?
No, I didn't. I got into crypto just through a friend who got into it himself in like 2015 or so, because he did online poker, and that's how the classic story of like how so many people get into crypto is that they bought their crypto, or they bought Bitcoin, through like Bovada or one of these platforms, right? Because it's like, kind of before there was a roll bid or staked or anything, there was like Bovada and these online, gambling sites. And then he was doing very well in this and kind of turned me on to it in like 2016 or so. And no, my background's in computer science. I mean, for years, I did like big data, machine learning stuff, kind of before like the ChatGPT AI was super cool. Like we would do kind of like predictive analysis stuff for financial service companies, like very boring stuff. And like the real aha moment was in like 2017, where I was sitting on a client site, working for a big four consulting company. I was at a client site in a conference room, and, we're just talking about, look, I still think data is really fun. There's a lot of really interesting stuff about data, but like doing it like for like insurance companies and stuff gets be a little boring. And I just sitting there, and this is like during, 2017 when Bitcoin and Ethereum were just like skyrocketing upwards. I'm just sitting in a conference room being like, what am I doing here? Like I'm glued to CoinMarketCap's website and just glued to the prices and charts. And I'm like, what am I doing here? Like this is so much more interesting. And I, by getting in kind of early around that time and selling enough to kind of fund a lifestyle of trying to build in crypto really early, like self-funding my first startup and taking a little bit of angel capital just from like friends and family and stuff, but doing like analytics for crypto companies and for crypto data. Eventually found this like novel sort of Bitcoin mining optimization opportunity where if you could mine Bitcoin Cash sometimes instead of Bitcoin, you can use the same hardware and yada, yada. Basically, long story short, sold that to a private equity company, got into private equity. And then, COVID happened. And, my current co-founder, who I had met through his time at BitGo, he just called me one day and he was like, hey, we're just catching up. And he's like, have you heard about NFTs? Are you doing anything with NFTs? It's like 2020. And obviously had heard of them, but like, it's just still so nascent, like where, you could just go onto these websites and, mint a Bored Ape for nothing. It wasn't like a secondary of anything. And, we started kind of talking about, what was missing from like an infrastructure standpoint, like how like early it was basically. And then that was really kind of the impetus. Like that was the start. That was like end of 2020. So it took us a while to kind of build out the, what has become Arcade, this NFT backed lending protocol. It started almost, in the next few months, it'll be like about 3 years since we like started talking about it to, things just kind of take a while to like really get your head wrapped around like what it is you want to build and how to do it right, and building, raising capital and building a team and kind of doing all the like legwork that has nothing to do with, making like monkey picture loans or loans on Rolexes and Supreme, shirts and stuff like that. Yeah. So that's kind of the journey.
Oh, it is a fascinating journey. And, for those that haven't really been paying attention, 2020 is before CryptoPunks even blew up. CryptoKitties were still kind of the dominant, I guess, figure for what people thought about NFTs. I think CryptoPunks didn't even go past 2 ETH until 2021 or 3 ETH around there. So very, very early days from it. What was it like then raising capital for something of an NFT borrowing and lending platform? If I believe you guys were the first to the scene in that industry or that sector, correct? What's it like explaining those early days to the VCs and capital funds who probably have no idea what NFTs were?
There is one other competitor of ours, ecosystem participant, I like to call them, but they had been, I think they had already, I'm not sure if they had already launched. I mean, we're going like, I'm losing my memory at this point, but like the concept was, it was really kind of just like smashing DeFi with this kind of thing that's starting to pick up traction and people are starting to care about with NFTs. And just, I think, actually like while the concept, it didn't appeal to a lot, like certain people. I think a lot of like the DeFi related investors that were early backers in us, they sort of saw like, hey, this is sort of, and that's how we kind of presented it. It's like, hey, this is green space. This NFT thing is like, it's catching on. It's really exciting. Tons of people are interested in it. DeFi is like, very tried and true. People, TVL, this is like bull market. So TVL is like, approaching 150 or more billion compared to like today, it's like at like 40 billion, which is still sizable, but quite a bit larger. So, really like the story was less about like, oh, there's some tried and true path to like figuring out like NFT DeFi. It was more just like, this is a thing that's missing. It seems like, that seems like a good idea to smash DeFi with NFTs and let's figure this out. Right. And now, now there's, you can go on DeFi Llama and look at like NFT lending it's its own category. And there's, of the, just on DeFi Llama alone, there's like, I think there's like 15 or so different projects, and there's probably a lot more that just haven't, listed on DeFi Llama. So, now it's like, I think everyone, like if you're a serious collector in NFTs or just you even own just anything above that's like, a large collection, like a Pudgy Penguin or something like that. Like you probably have are aware that you can go borrow on these, you're using these as collateral, but that wasn't so much the case in like early 2021.
Especially those early days, was really just collectibles and art, and now it's kind of exploded into gaming, real world assets, and all these other things that have been integrating. But one of the toughest hurdles that I've had to overcome with borrowing and lending is kind of just even the educational aspect of it, of just borrowing against something. It's not something that's generally for a beginner, but takes some time to really adapt to it. How have you and Arcade gone about that educational piece of trying to normalize borrowing and lending with NFTs, and then also teaching the financials behind it?
I saw like a great tweet the other day that was, I forget who it was like attributable to, maybe like Peter Thiel, that was like, you need to not try to go for, you're not selling early on to hundreds of thousands of people. You're trying to find like a core audience of like a couple hundred to 1,000, basically. I think we're still in that range. I think early on, the power users, that own a lot of high, blue chip Grail NFTs, the art stuff, as well as, punks and Bored Apes and assets like that, already were pretty sophisticated, like understood like DeFi principles. I think, there's still a great opportunity for us just in terms of our education of like, why you would want to, for capital efficient, why you'd want to borrow for like capital efficiency and tax purposes, and obviously not financial advice by any means, but there's some obvious benefit in borrowing versus just, selling. And that was kind of our early, our early pitch when talking with, early backers was, the current avenues for liquidity with NFTs is really just, at the time was just, buy an NFT and then sell an NFT. And then you could get, you get some money and maybe, but then you're incurring a capital gain there. Right. So borrowing and lending doesn't incur that, which is, that's essentially the essence of like capital efficiency. That's the whole point. So yeah, just try, there's no like mass education concept around this. It's like, let's talk to as many people that, own high quality NFTs that are something you can borrow on. You can't really borrow on anything. Like just because you have an NFT doesn't mean it's people would want to, offer you liquidity on it. There's gas fees. There are like hurdles. So, but when trying to find like users, that actually kind of concentrates it down to a core audience that you can go after. Like, if you kind of, you have the screen up here, like you can see all the NFTs that have been lent on currently are all like, pretty high quality stuff, like stuff that has, demand that will like has like intrinsic demand behind it, is worth a lot of money. This is a loan for a CryptoPunk of 60, I think it said it was 63,000. Yeah. So like, on the floor there is 47 ETH. So like there's a perpetual demand. Maybe for CryptoPunks, the floor might go up and down, but we're not going to go bother trying to go educate, the guy with an NFT that's worth 0.001 to about NFT lending yet. Like it's not, maybe at some point, but we're still trying to, really go educate and spread awareness to, serious collectors, people that own, NFTs that they'd want to, that are lendable, that there's an audience for to provide liquidity towards.
Yeah, it is really quite fascinating how it all works. For the loans that are currently, in escrow and have been borrowed against, it looks like the majority of them are using USDC versus the native asset Ethereum. Can you just dive in a little bit of maybe the psychology behind that, or maybe just the user history of why people prefer to use stablecoins versus any of these native assets?
I think one of the selling features to be a liquidity provider on Arcade or just NFT finance, NFT lending in general, is if you see the APRs there, they're generally fairly oversized relative to, DeFi yields you'll see across the space right now. So, that's if you think about like the free risk rate, basically both in TradFi, like treasuries, as well as like the free risk Ethereum rate, which is just staking Ethereum, right? It's like around like 5-6% or so. You're seeing APRs though on Arcade, for like, here's a CryptoPunk, for that, I think the APR there was 35%. It's a short-term loan, right? It's only a 14-day, a 2-week loan, but the underlying asset is somewhat volatile, right? So you have kind of compounding risk in that the NFT has some volatility associated with it, that the floor goes up and the floor goes down. It's pretty illiquid because there's, Bored Apes, for instance, there's only 10,000 of them. So you only have, you don't have this just endless demand for, you have like specific people that would want to own and buy a Bored Ape. And then also, most all of the sales for NFTs are in the underlying currency in Ethereum, right? So now you have kind of NFT risk, or volatility coupled with, with the underlying currency Ethereum volatility, right? So, NFT could go up, Ethereum goes down, kind of where do you net out at? I think what we generally kind of see is like people are more willing to, or more interested in doing stablecoin lending when there's sort of a potentially like a negative sentiment in the market, like locking in a rate at, a dollar is a dollar, right? One USDC is one USD. You're getting an APR that's like fixed, and you're not going to incur basically the underlying currency like volatility or potential, drop in price, basically. So I think that's more interesting. But then you go and see a lot of the offers are made in WETH. So yeah, it's different people. Like that's what's kind of interesting about it is like what I'm describing, I think is fairly generalized, but it's a peer-to-peer market. So some people are like only going to be interested in lending on the art stuff, like one of one art thing, NFTs, and they only want to do Ethereum because they're like super crypto maxis, and they're not like, they're just in this for Ethereum. They want to, stack more and more and more Ethereum. So it really depends. It's like, there's no, which makes it kind of hard for us too, to like, we're not catering to like one particular user. We're catering for like a couple different types of personas effectively. So, we try to offer a front end here, a platform, and at the protocol level that we just released the new version, we try to offer something that's like fairly generalized and isn't overly opinionated any which way.
Yeah, it's very smart how you guys have done this. I've pulled up the longest durations. So these are generally like some of the more valuable ones. Passing by all these watches, which I think is what's captured a lot of the interest recently, because people are like, what is this? This is a Rolex. You could borrow against it. How does this process work? And I guess how important of an impact does this have for Arcade in terms of the evolution of what NFT borrowing and lending could be?
Yeah, that's a great question. I mean, it basically came down to my co-founder and I saying, we want to show our parents that we didn't just create a video game for people to borrow against, animal JPEGs. No, I'm joking. But no, I mean, look, we've kind of said from the get-go, and we always believe that NFTs, we're really interested in NFTs as the token standard to represent, property rights of some sort, right? Property rights is like a very general, statement, right? That could be property rights associating with there's a monkey picture, there's a mutant ape, right? There's a high-end art piece, there's a Rolex watch, like NFTs just as a token standard, ERC 721 and to some extent 1155, like we're very bullish on that. And that, so our whole like thesis was never just like, we want to only really just focus on profile picture NFTs, right? We always kind of said, we want to be supportive and try to make happen on this platform and show people that this can happen, real world assets like you're showing here with like the Supreme, but also, other stuff that's not just simply kind of the hype speculative type of projects, not to name anything in particular, but that's always been kind of in our philosophy and our thought process, is that the only way that this as a platform, as an entrepreneurial endeavor, as something we want to give to like society at the end of the day as a public good, the only way it like really has long-term staying power is if the underlying assets used by this system, this protocol, expand well beyond just kind of like, profile picture Bored Apes. And it's nothing like say like bad about Bored Apes. Like I've owned them. I think they're cool. They have great parties, but the world will just be too small if we're only focusing on this. I mean, it's been kind of my criticism of like NFTs and the NFT space for a while in general. We could kind of get into that separately, but to the original question, bringing and doing these types of loans with like real world assets has been incredibly important. And because it shows like kind of the art of the possible of, and we've called these kind of like test cases, like this, there's not going to be 1 million people that own over $1 million worth of Supreme shirts. Like that's obviously like a very select number of people, but it does show that there is an appetite on the lender side and the borrower side. If you have something that is, esoteric and exotic and a true one of one, that there is a borrow and lend kind of market there for you, if that makes sense.
And looking at this Supreme loan that's out there, the principal was 1.1 million. The repayment is 1.172 M. So 72,000 is the interest.
Yeah, it's an expensive, like, it's a high APR. I think it's right. Yeah, it's 2 months, right? And that reflects like this is, it's a very niche liquid thing. You can see there's not currently yet. There's not extension offers on it. I would imagine there probably would be at some point because there are people out there that, that they love that APR, and they think that I think this was appraised by Christie's, if I recall correctly. So like this was like appraised and did have like a number associated with it. But there's probably people that would want to lend on this. But how do they find each other like in the real world? That's like impossible. Like I don't know how you could find someone, or if you're the borrower, like you're gonna go take this to, I don't know, a bank. I bet you're gonna go, like you're walking to like Wells Fargo and be like, hi, I have $2 million worth of Supreme shirts. I'd like a loan, please. Like that's not going to happen. Right. So, the way this works, I think to your earlier question is there's another company out there called 4K. They've been a good partner of ours, and they actually hold in their custody. So like they have like a physical, custody that they'll take possession of these assets, like these Rolexes and these shirts and things like that. They'll take possession of it, and then they issue to the original owner an NFT, and the NFT just acts as a proxy for the ownership. So it's like a bearer instrument. So if the original owner, the wallet address 0xF57, if they gave you that NFT, you could take that NFT back to 4K and say, hi, I'd like the Supreme shirts, please. And I don't know like exactly the redemption process, like how it works from there, but effectively the NFT is like this bearer instrument. So they actually physically hold the asset. But what's cool then is that this NFT, now you can go do all this DeFi stuff. You can go resell it on OpenSea or wherever. Like now you wouldn't have to go lug this, this trunk of t-shirts around. Like also, that's like you're going to potentially damage them or something like that, right? Like you've got it in basically a vault, and now you have this, kind of like calling card that says, hey, I own this thing is real, and what can we do, right? And so like that fits right in with DeFi and exactly with how we've imagined kind of the cross section of DeFi with real world assets, actual real world things, not like I think like the RWA as a label is getting like kind of bastardized a lot lately with just people doing like tokenized treasuries and all these things that are like, they're not assets. Like, I mean, they're assets, but they're not like physical objects, so
they're not tangible like we want.
Yeah, exactly. So that's how it works though, basically, and I imagine that in the future, there's going to be a lot of people that are going to break into this, take possession of a thing and then issue a token associated with it. So there's a centralized component of it, but from the transaction, the loan, all that stuff, it's all permissionless, on-chain DeFi.
That's where we want. And the goal, if you're going to explain this to somebody who's outside of crypto, when you think of real world assets, some of the first things you'll think about is real estate, right? Like borrowing against the deed to your house and stuff. I know there's a lot more regulatory issues that comes with that. This is simple, right? Because it's just brand value. You scroll down to the bottom of this page and you look at the borrowers and lenders, you see here, the person who lent out the 1.1 million has lent out $21 million so far, and it's collected about 17 million. So it's a pretty fair rate, right? The default rate looks like it's about maybe like 20% or 15%. Can you touch a little bit about, the participants on Arcade from the lending aspect? Like what is the average loan size? What's the default rate? And the users who generally participate on it, like what type of, personalities do they represent? Are they degens? Are they professionals? Are they TradFi, et cetera?
So the average, just on the metric side, like the average loan, I believe is around 45,000 or so. And I think the average default rate is around like 7% or so. So I think that sounds about right in my mind. Yeah, the personas, like who are the actors, who are the people actually using this? It varies. It definitely varies. I think there have been institutional counterparties like hedge funds that we know of. There have been hedge funds that are like liquid guys that do focus exclusively on NFTs. There have been DAOs both on the borrower and the lender side. Whale people, users, folks that are just out for trying to find the best, APRs and yields they can possibly find. It really depends. I would say it depends a bit more. There's no one type, there's no like one user. It really depends on the collateral. Like there's some groups out there and some individuals that only want to lend on, art stuff. And then there's some people are like, there's one user, I think they've only ever done Squiggles and Skull of Lucy, which is like a Sam Spratt art project, right? Like they won't touch, they're not going to touch Rolexes. They're not going to touch Bored Apes. They're not going to touch punks. They're not going to do anything like that. They're very much just like art, they're just interested in the art. So the use cases are multivariate. Some of it is just, just trying to find best yield. Some of it is people looking at it like, I'm going to take a loan. It's kind of like a put option. I think it's, there's a lot of different use cases. I would say, there's been thousands of people that have used Arcade. There's definitely like power users, the people that do, serious loan volume, like you shared there, that one user. And some of these people, I don't, a lot of them, I don't know who they are. I'm pretty good at like, tracking people down on Etherscan, especially when they have like ENS addresses, right? But, a lot of them we don't know, we only know because like they're, like what they're interested in or what they're doing is they're talking in our Discord or they're actively like kind of participating in the discourse and discussion of channels that we have on Twitter and things like that.
I'm glad you brought up the put option thing. So if I remember correctly, I think Beanie Maxi, he's kind of the disgraced scammer, a very controversial kind of person, depending on how you view him. He actually posted something recently about how all the NFT loan platforms are really just leveraged options, even because of how they can be used and, engineered. For yourself and for somebody who's managing this platform where users are we know how degens are. You give them a little bit of a crevice and they're going to, run a whole mile and build a waterfall with it. How do you manage the platform when users may be leveraging it in a way that it wasn't actually intended? Do you tend to be off-put? Do you try to lean into it? Or do you kind of have to step back and watch and see how it is, even in maybe if there's a concern of some sort of like regulatory violation?
I think it's more the latter, with the advent of V3, the third version of the protocol, it's non-upgradable. I think as you have kind of on screen there, we made a conscious decision to say, we're putting this out as a public good. We, if how people end up using it may not necessarily be like how we would expect to use it. Some people are going to do super short-term loans, and that's going to be more like akin to, like a put option, like a super short expiration put option. Some people do, if you go back onto the page there, you'll see people that have done, 6 month, 9 month, 12-month loans. Those look, and from like a actual a transaction basis, those look and feel a lot more just like a typical loan. We try not to be overly opinionated, and we're not going to tell people kind of what they can and can't do. What the V3 protocol does do is it does not let just any collection into be whitelisted. We used to just, if people ask, they would want to, they say, hey, I have this NFT, I'm part of this community, I'd like to borrow against it. It doesn't show up in my wallet when I connect to Arcade. And that was because we weren't surfacing that. We would just say, hey, sure, we'll whitelist this collection for you. Now with the advent of V3, we're putting that is now a protocol level operation. So yeah, I think you can on-chain whitelisting effectively. So that'll be a protocol thing that, the community, through the various channels that they can have, sway in the direction of the protocol, they can choose to what should be whitelisted or what not shouldn't be whitelisted, and I think that kind of puts some of the onus on, the people that are using it, and lets us as the kind of the original developers of this say, maybe this wasn't, where we originally thought it was going, but, we're not the people that use this thing every day. Right. So that's kind of how we think about it. We try to be sort of unopinionated, but, in the kind of face of like ever changing regulatory stuff as well, trying to be sort of smart about it. It's obviously challenging as, developers, but sort of empowering others to make decisions for us, we think is probably both from a community and endearment standpoint, smarter, better, gives people, a sense of ownership, as well as, says that, hey, like we weren't, it's not like Rob or was the one who made this decision on something, right?
Yeah. So looking up, and I have here pulled up all the V3 upgrades. The thing that stands out to me, there's two. The first one I'm going to focus in on is the non-upgradability component to it, right? This infers that the first two versions were upgradable. And so here you're making it immutable, which effectively, increases the decentralization by probably a few orders of magnitude. What is the thought process behind that? Is it to pull kind of like a Eric Voorhees and say, hey, I'm decentralizing my product, therefore regulators can't say anything? Was it a request by the community? Or is there something else there, like a preference?
There's a day in which, the people that originally built this protocol will not be working on this protocol. And we wanted to ensure that, there's not some rogue person that comes in one day and decides to, to upgrade the contract or upgrade some contract and, make major changes that allow to the, potentially stealing of funds or something like that. Like what you see is I'm a big, I got into crypto because I really, obviously I was, as I mentioned, my friend showed me, hey, this thing's going up in price, but really reading the Bitcoin white paper and saying like, oh my God, this makes so much sense. Like this is awesome. This is like, you ever see that meme that's like when it's like, if, like it's like this utopia picture and it's like, if X had it, happens, right? Like this is the world we'd live in. I think you should be trying to build something that really falls in line with the ethos of crypto. And crypto is not, blockchain is not crypto and crypto is not blockchain, but they are obviously intersecting and connecting. But yeah, the thought process was, sure, there's all these like kind of like, external things like, hey, so-and-so, you can't touch us. And I don't know, maybe that makes sense. Maybe that doesn't. I'm not a lawyer. I don't know. But ultimately we just kind of said like, we don't want there to be ever a scenario where in the best case scenario in 20 years from now, I'm probably not working on this project anymore and I'm just a community member. And if the V3 protocol was still in usage and people still wanted to use it, we could reliably say that no one has the ability, whoever's maintaining the project or working on it now, no one has the ability to go in and make some sort of drastic change that was not kind of in the original vision of what we wanted to build here. So in that sense, we are opinionated in that, we don't want it to be upgradable. If someone wants to go build a fork of Arcade and make it upgradable, like go ahead. We spent hundreds of thousands of dollars on audits and looked at it from lots of, just multiple auditors. And we feel really like this is by being immutable, unupgradable. If you can build on Arcade as another project or as a community or however you want to use Arcade, you can use it with the certainty that this thing is you're not gonna get rugged and this thing's gonna change in some major way on you. Like what you're seeing is what you're getting. And that was, that's important to me. It's important to the team. And we felt like that was an important decision. Yeah. I think that's, yeah.
Yeah. Some tough decisions to be made, but the majority of us here, we want decentralization, and the path to decentralization is generally the journey that most of us go down, right? You can't have that Bitcoin decentralized launch. I think it's very improbable we'll ever see that again. So you have to start a degree of centralization and then slowly, eventually permeate to that, decentralized aspect. The thing though about that is the majority of projects say they want decentralization and they're moving towards it. They don't actually implement it. So for you guys doing that and taking that on, big props to that. And then here at the top, the second thing I wanted to bring up is the collection offers. I know when we had first met, we talked about how Arcade separates itself from the different borrowing and lending platforms and the main thing that was the difference was things like BendDAO, where you have these, liquidity pools and collection offers and different things like that, right? Which kind of leans more into the degen aspect of it, right? This is where you see all those cascading NFT prices fall because of blend and all these other things, these financial engineering components where people really take advantage of it. What is this collection offers of non-vaulted assets? And then on the other side of that, how does Arcade separate itself from participating or turning into those type of platforms where degens financially engineer things on the platform?
So the collection-wide offers was something that we actually had always supported on the V2 protocol. Just the manner in which someone could support a collection-wide or someone could accept a collection-wide offer was kind of cumbersome. So basically, the collection-wide offer is like if you click into Doodles there, you get a little, and this page is actually being completely updated, and it's going to look a lot prettier by pretty soon. But if you go and you see on the right side there, you can make, you can make an offer, right? You can put in for, and you see all these offers, right? So there's like probably, if I'm eyeballing it, like 8 or 9 offers on there, right? So basically what that means is this is a standing offer. It's a signed transaction that someone, so if you go to the top one there, I can't see the full name, but it's like RWAs or something .eth. That person, that wallet, right? They've lent out $512. They haven't borrowed anything. So they've done 2 loans. They're like a pretty first time user, which is awesome. That's great. This is a signed transaction that just basically means that RWAs is saying, if you've got a doodle, you can accept this offer of 0.55 ETH for a 30-day term loan at 60% APR. And you can just accept that without having to negotiate offline or anything like that. They don't have, and you can just, so if you just went to borrow and you had a doodle, you could just basically you'd see this as a standing offer available to you. And we always had that in V2. In V2, it required you to put your asset into a vault, which is our way of letting people do bundles. Basically, you can do more than one NFT in a vault, and you can borrow against a single vault. So you could borrow, if you go to the homepage, I think there was today, there was just click the top left button. Yeah, there you go. So you see that right there, the number 59. Yeah, if you could just go latest loans there. Yep. So that's a loan in a vault that has all these NFTs in it, right? It has 5 NFTs in it for 50. Pretty cool. That lets people do a whole bunch of things where they don't have to click all these buttons, and they can just, just kind of shove it all in one vault, and awesome. But we only used to let you accept a collection offer, which is just like a resting liquidity, if you will, if you had your asset in a vault. Now we let you do it if it's not in a vault. So you don't have to use this vault construct. The vault construct is really meant for multiple NFTs. There's some other features that it provides, but for most people, they probably don't need a vault. Most people just want to just have the one NFT and just borrow against it. And now collection offers support without unvaulted collection offers, which is awesome. The way it doesn't kind of financialize things relative to some of those other platforms is that every NFT, there's no cascading liquidations. There's no liquidation mechanic on Arcade. The liquidation mechanic is just time. If you don't pay back your loan after, so this one's a 30-day loan. It's due, it says October 13th by at 9:26 a.m. That if this person doesn't pay that back after that date, on the 13th at 9:27 a.m., the lender now has the right, not the obligation, but the right to claim the collateral. The loan is past due, right? This is what they agreed on. It's very straightforward. There's no if the floor price went down or, the value of the underlying thing increased or decreased. No. It's what you see is what you get. It's super straightforward. So this person could, and I'm not saying they would, but this person could default on their loan. This would not impact any other loan on Arcade, at least this loan, if this person defaulted. Now, again, you're in the user behavior might change, but there's no automated system that, would forcibly close out someone's loan or something like that. So there's no hey, you're in danger because the floor price, the underlying value of the collateral you're borrowing against is below, or is above, right, how much you borrowed. That doesn't happen. There's no automated system. It might change user behavior. Users may say, oh man, the Bored Apes they're dropping, and I'm not going to repay this loan, and that's for them. But there's no automated system there. Everything is totally segregated on a peer-to-peer basis.
Yeah, it's very enlightening to hear, and I think because of those other platforms where they have the liquidation cascades that are kind of feeding the degens, it's kind of grouped every platform into that type of thought, to where this is, I guess, a little bit more akin to the traditional type. Although degens do love whatever type of financial engineering pops up. Is this vaulting standard? Is this done on chain? Is this off chain? And then I know over here it says smart vaults. Is this the same of what you're explaining, or is it different?
Yeah, it's the same, and it's fully on chain. The Smart Vault, basically, it's an NFT, and it has some cool features in it that let you there's some cool features, like there's an ape staking vault, so you can deposit into a Bored Ape into the ape staking vault, and you can take a loan out against it while it's still doing the ape coin staking, which is provided by the Horizon Labs, different platform. We just tap into that smart contract. But yeah, it's fully on chain. A vault is basically just like an NFT. And there's some of the features. You can get airdrops from it. You can kind of do some other cool stuff. Yeah, multiple assets, delegate cash. Yeah, there's a bunch of reasons and cool things. We support native CryptoPunks inside of the vaults. So CryptoPunks are not technically an ERC 721, right? They're like, they're super old. So you didn't have, they came out before the actual ERC 7, the NFT token spec came out. That doesn't play nice with most of crypto, right? Like crypto products, protocols like, ERC 20, 721, 1155, CryptoPunks are not a standard. So you have to build in like custom functionalities to be able to support CryptoPunks. Well, that's what the Vault does. The Vault, it has custom functionality to natively support a CryptoPunk. You can just deposit your CryptoPunk right in there. Also, the same exact kind of scenario with Super Rare. Super Rare, was really early in the NFT space with a lot of cool art stuff, and a lot of their assets, a lot of their NFTs are not the typical NFT token standard. They're not the 721. Our vaults natively support that.
You guys have really, really been crushing it. Yeah, CryptoPunks are ERC 20. They're like the version. It's a 721 standard and wasn't finalized, I think, until like March of 2018. So I guess this leads me to the like a big question, which is beginning a trend, is this idea of like multi-chain, as things like Solana take off or Bitcoin ordinals or whatever the next meta is. How does Arcade go about approaching that and trying to capture, I guess, some of that value? Or are you guys just staying in your lane on Ethereum and really trying to master all of the innovations that come to ETH?
Yeah, I mean, it's a great question. Partly our thought has, historically our thought had been, well, we want to be on the chains that have assets people we want to borrow on, because there's just not, some L2s or kind of, EVM compatible chains just don't have any real user activity on the NFT front. And that was kind of our positioning for a while. I think that's changed though in the last couple of months. I mean, we've been really excited about what we've seen in the Bitcoin space with ordinals. Deploying the protocol there is basically an impossibility. I don't know how we would go about doing that. So, we're like super encouraged to see, platforms like yours and Emblem, like being able to like bring these assets onto EVM chains, not necessarily just Ethereum. But, our thought process is kind of in the, moving into the future is like, we want to put some of the decision and thought process around like, where should Arcade be deployed into the hands of the end users. So that's kind of our thought process around it, especially as, you see like what's happening on like Base, for instance. The gas fees are super low. And that was always an inhibitor to deploy, to being on an L2 was, well, we kind of thought, well, there's no NFTs there, so why would we even bother? But, if there's NFTs that people care about on Base and the transaction fees to do it are super low, that friction of like, oh, I have to take that's like the DeFi. It's that's like the classic DeFi problem is like, you can certainly buy $10 worth of Ethereum on Uniswap, but it's going to cost you in gas, $7. So like, what's the point, right? So that's always been kind of the problem. We're super encouraged by that, the kind of meaningful adoption of L2s, and our thought process is, put some of the decision making into the, from feedback from the community and the users, like put it into their hands if they want to see Arcade on another chain. EV compatible, I think, is the easiest route. Something like Solana, maybe in the future, if there's an easy way to like port over, like a deploy like EV, Solidity onto Solana. I've seen some stuff like Neon and these kind of projects. I think the crypto, like the superpower crypto provides builders and users of the products is that they, when done correctly, they can have an actual meaningful stake in the decision making and of what the platform, the products, whatever it is, the protocol ends up doing. That is kind of a weight off of the shoulders of people, someone like me, because I don't have to sort of pick and choose, oh, is this the right thing? Should we be on this chain or that chain? Like put some of that, that decision making into others' hands, because they're the ones who are going to end up using it anyway. So me just taking kind of guesses, because I personally think that this chain is better than that chain, is kind of stupid at the end of the day because I'm not the one using it. And it's really hard in crypto to get like sentiment and like consensus around like what you should be doing as a developer. I mean, you have a good idea early on, but as the project kind of grows and as the space rapidly grows, you said earlier, like last time we talked was 6 months ago, feels like it's been 2 years. Like everything's happening so quick, even in bear markets, that you really need, you don't have a great way to like kind of like tap into like what people are looking for. So, using the available tools, that the tools that are available is like the best way to try to figure out decision making in terms of like where what chains we'd want to be on and roadmap sort of items and things like that.
Yeah, cutting through the tribalism in this space is really tough at times. It's really, really thick. To go back a little bit, yeah, Liquidium has deployed on ordinals. I think they're using things like DLCs, but the interest doesn't seem to be too high because I think the market over there is really immature. So people, I think, just aren't familiar with the borrowing and lending platform. With Emblem, yeah, we're excited once we get the migrations done. A lot of people want to borrow and lend against their rare Pepes, of course, right? That's the grails. So that's here probably in the next few months. Is really exciting. And then one final question I had for you is like in terms of builders, you mentioned builders, and I saw in V3 that Arcade had put out some documentation for developers that wanted to build with Arcade or build on top of Arcade. What does that exactly mean? Are there any projects that have begun using Arcade or building on Arcade, and any types of recommendations for anybody listening here who's a developer and interested in Arcade? What's the right path to doing that?
Yeah, I mean, there definitely is I think almost not every, but a lot of the NFT finance projects out there have leveraged, our API. We have a pretty robust API, and they use that for all kinds of different things to list on Arcade, to kind of tap into some of the liquidity that's on Arcade. Our thought process, like I said kind of earlier, is that, and this is a problem I sort of see, I think is just kind of general across crypto, is like people, they don't leverage kind of the like body of work that already exists, and they try to rebuild a lot of the same kind of foundational things that already exist and have been battle tested, right? I mean, you've had literally over $100 million worth of loans go through, thousands of loans go through Arcade. Like, it's fairly battle tested at this point. You can trust that, this thing actually works. And so when we say, we want you to build on top of it, we have a pretty robust API suite. We have an SDK that's coming out soon, but the core protocol has been, validated in a lot of ways. That shouldn't be kind of taken lightly. Like, you should, like, I want people to build using vaults and use, all these different features, because it'll save you time. You don't have to go reinvent the wheel unless you really think, or fork it, go ahead and fork it. It's open to the public. Like, the repos are up there. You go fork it, but build using it, because we've spent so much time thinking about these things in really difficult ways. And unfortunately, you don't see that. I mean, there definitely have been NFT protocol, finance and lending protocols that have had, they've had issues, that have found bugs associated with them, like critical bugs that have taken them down for periods of time. And, we would say, like, consider just in general using what's already out there in unique and novel ways. We don't need to reinvent the wheel just to add one new feature. Think of something kind of interesting and unique. But yeah, I mean, the best way, like, our Discord is pretty active. We have a whole developer channel in there. The documentation is really robust. All the audit reports are up there and everything. So, like, we've put a lot of time into putting resources out there so that people can leverage, all the hard work that we've put into this protocol, into this platform. But we always, we talked with lots of developers and people that are trying to build on top of Arcade all the time, and give them ideas about, like, best way to, like, implement something, or use an API, or use, call a function. Like, we're definitely around to collaborate and give, kind of our thoughts and guidance.
Yeah, I think that what you said is really important, to use existing APIs. I do see this with a ton of teams of going out and trying to rebuild it, wasting or spending weeks and additional capital when you could just really leverage another ecosystem. It's really, really important. Rob, I appreciate you for your time. Arcade is absolutely crushing it. I'm excited to see what you guys have in the works in terms of real world assets, and what other variety of NFTs come to the platform. No doubt that you guys are going to be leading the way, as you have shown throughout the course of this year. So appreciate it, and keep up the awesome work, man. You guys are doing a great job.
Thank you. Appreciate it. Thanks for having me on.
No problem. Thank you guys for listening and watching. We'll catch you next time.